Good evening.
Good evening, sir. Yeah, welcome.
Okay, so this night we are going to continue from double taxation relief. A- After that, so we are going to look at tax evasion and avoidance. So last week we started double taxation relief. We have solved one question. How many questions do we solve on double taxation relief last week? How many questions for the online students? How many questions do we solve on double taxation relief?
One, sir.
Okay, so let's look at one more question. So let's look at one more question, one or two more questions, so that we can go to tax evasion and avoidance. Question, let's look at question one. Question one. So somebody should help us read question one. Question one. Oh yeah, you can go ahead.
Evasion Limited and Limited and Erin Kinikonya Limited, two separate entities and Nigerian companies doing well in their different sectors within the economy. The owners of the two companies decided to pool resources together and form a bigger outfit for necessary synergetic benefits. Consequently, a new company, Araromi Limited, came into existence with a new dynamic advantage of free trade within the. Please scroll down.
Okay.
Scroll down. Scroll up. Within the Economic Community of West African States, ECOWAS, by establishing a branch of its company in Cameroon on October 1st, 2017. The following were extracted from the consolidated financial statement of Araromi Limited for the year ended 31st December 2019. Araromi Limited, in thousands, all figures assumed correct. We have the turnover overhead. Included in the overhead are the following for Nigeria and Cameroon. All figures are assumed correct. Depreciation, sales tax, VAT on non-current assets, VAT on revenue expenses, provision for advertisements, stamp duties on rent agreements. You are informed that Araromi Limited paid 12,000 US dollars to the Cameroon Tax Authority as income tax on business transactions within. Sorry, one was 375,000 naira. Keep scrolling. Mr. Idris, keep scrolling. Maybe it's my network.
It's not your
Hello,
network.
can you hear me?
Okay.
Oh,
Okay.
okay. I'm scared.
Can you hear me now?
I can hear you, but you were not scrolling.
Okay.
The net profit for the Cameroon operation was 375,000 naira. The agreed exchange is 20 naira to 1 USD. Capital allowance, Nigeria is 90 and for Cameroon is 45,000 naira. Required, compute the income tax liability of Araromi Limited, the relief for taxes suffered abroad. Full stop.
So this is a question of double taxation relief. Again, Araromi Limited, they have head office in Nigeria. So they now have another office, a branch in where?
In Cameroon,
Cameroon. So we are asked to compute the tax liability of Araromi Limited by considering double taxation relief. So looking at this question, first and foremost, where is the net profit of both Nigeria and Cameroon? If we look at this statement, the following were extracted from the consolidated financial statements of RRM Limited for the year ended December 31st, 2019. This means this turnover, they say consolidated. That means is for both Nigeria and what? For both Nigeria and Cameroon.
Cameroon.
The overhead too, this overhead showing here is for both Nigeria and what? Cameroon. Turnover minus overhead. It will give us what? This 1,250. What do we call it?
Profit.
The
Net
net
Operating.
profit. The net profit for both Nigeria and what? Cameroon. In the additional information further, we're now giving the net profit of Cameroon operation 375. That means we can get the net profit of Nigeria too by removing this 375 from the total net profit. So let's use Excel. Let's use Excel to compute this. Let's use Excel. I want to share the Excel. So the name of the company, we are using Excel to compute it. The name of the company is called Araromi Limited. The name of the company is Araromi Limited. Araromi Limited. So we are giving Nigeria, we are also giving Cameroon, and we get the total. We have first Nigeria, second Cameroon, while the third is total. The year of assessment in the question, Aurora Limited. The year end is 2019. That means the year of assessment will be 2020. The year of assessment is 2020. So the net profit, the Nigeria operation plus Cameroon operation is going to give us the total. So looking at this, we start from net profit. Net profit. Net profit. What is the net profit of Cameroon in the question? What is the net profit of Cameroon?
375.
375. Can we all see that? I'm not sharing the question again. I'm
Yes, sir.
sharing the Excel now. Or I should just solve the solution is in the Word copy already. Can I just explain, or I should use Excel? Which one do you prefer?
Use Excel.
Please use Excel.
Okay. Since we know the net profit of Cameroon, and what is the total net profit in the question?
1.250.
When you are giving the 1,250,000.
1,250,000.
So that means the one of Nigeria is going to be 1,250,000 minus what?
375.
375.
So you get, that means the net profit of Nigeria is 875.
Mm.
You now add back disallowable expenses. You add back what? Disallowable expenses. Disallowable what? Expenses. So we are giving the breakdown of the overhead. What are the breakdown of the overhead? They said included in the overhead are the following. Number one, included in the overhead is what?
Okay. Depreciation.
Depreciation. Depreciation is a disallowable expenses first. Depreciation. How much for Nigeria? How much for Cameroon?
120,000 Nigeria.
I'm coming. I want to use New Times Roman. Okay. So for Nigeria, how much?
120,000.
For Cameroon,
310,000.
310,000. The next expenses after depreciation is what?
Sales tax.
Sales tax. It means output VAT. Output VAT. This company charge an output VAT on their sales. They now classify it as an expenses. Output VAT is paid by the consumer. It's not paid by company. They pay it to the FRS. Company normally add it to their sales. This company now add it as an expenses. Is it allowed or not allowed?
Not allowed.
It's not allowed because Even if the company paid FRS, this sales tax company paid FRS, which is the output VAT, it's not their money, it's the consumer money. It's the consumer that borne the final burden of sales tax. So why are you now classifying it as an expenses? So what is for Nigeria? What is for Cameroon?
For Nigeria, 370,000.
370,000. For Cameroon?
New.
No. The next item is what?
VAT on non-current assets.
VAT on non-current assets. This VAT on non-current assets means input VAT. It means what?
Input VAT.
Input VAT. Input VAT means the VAT you paid on your expenses, on your costs. However, under tax, input VAT is classified into three. We have input VAT on cost of sales. On cost of sales. We also have input VAT on expenses. On expenses. On expenses. We also have another one, input VAT on fixed assets. Ladies and gentlemen, input VAT is a cost that you paid on your purchases. But how do we treat each of these three types of input VAT? This input VAT on cost of sales, we are using it to offset our output VAT. We are using it to offset our what? To reduce our output VAT. The output VAT means the VAT you charge on the sales, on your turnover. The input VAT on cost of sales will be used to reduce output VAT. Why input VAT on expenses is added to the expenses amount? Input VAT on fixed assets is capitalized on the fixed assets. So what the law is now saying is that as at present, the only input VAT you can allow as an allowable expenses is input VAT on expenses. So far as that expenses is an allowable expenses. If the expenses is not allowable, you cannot allow the input VAT too. But if the expenses is allowable, you can allow it. But cost of sales like purchase, opening stock, closing stock, when you paid input VAT on them, you use it to offset your output VAT. It's not allowed as an allowable expenses while computing adjusted profit. Input VAT on fixed assets too is not allowed because it's going to be capitalized. So go back to our question. The input VAT given to us, which input VAT is it given to us?
Non-current assets.
On what?
Non-current assets.
On non-current assets. Is it allowable expenses or disallowable expenses? Based on my explanation, it's a disallowable expenses. It's a disallowable expenses. Yes, because it's not allowed. It's going to be capitalized as part of the cost of the assets. Do you understand? Do you understand my explanation?
Yes, sir.
No.
So how much is the input VAT?
150,000.
150,000. The next is what?
Understand.
VAT on revenue expenses.
Is it allow or disallow?
Allowable.
It is allowed because it's an input VAT on expenses that generate revenue. That means expenses, any expenses that generate revenue for company is allowed. So you now pay input VAT on those expenses. It is allowed. You can see when I'm explaining the input VAT, the only one I color yellow is the one that is allowed. Input VAT on cost of sales, like input VAT on purchase, is not allowed. Input VAT on fixed asset is not allowed. So input VAT on the revenue expenses is allowed. The next item, which one is the next item?
Provisions for advertisement.
Provision for advertisement. You make provision for advertisement. You have not paid the advertisement. Oh. Advertisement cost is an allowable expenses. But you have not paid it. You now said you make provision for it. You now deduct it in your expenses. Is it allowed or not allowed?
Not allowed.
Not allowed.
Not allowed. You can't provide for an expenses you have not paid under the tax. No. How much?
Cameroon, 610, Nigeria, nil.
Nigeria nil. Cameroon 610.
610,000.
Okay. Which other one?
Stamp duties on rent agreement.
Let me take you back to input VAT. This input VAT, as for next year, January next year, according to the new the Nigeria Tax Act now, input VAT on fixed assets can now be recognized as an allowable expenses. It's one of the amendments made to input to VAT. Input VAT on fixed assets, you can now allow it as an allowable expenses. You don't need to capitalize it again. As from next year, do you understand? Do you understand?
Sir, please, I
Nigeria
have a
Tax Act.
question, sir.
Okay, ask.
Okay, sir. Sir, concerning this new law, do we need to, and the part that is just released, do we
You
need
don't
to
need
read?
to, for your syllabus now, you don't need it. I'm just explaining. As from next year, it's commencing next year. So it's not in your syllabus now. It's not in your, you don't need
It's
it
not
now.
going to be tested, right?
It's not going to be tested. It's not going to be tested. But even if it is tested, it may be on general knowledge. Like, what is the impact of Nigeria, the new tax reform? What are the benefits or challenges? That one is general knowledge. But they cannot test the application of it. It's not in your syllabus. Even the ICAN pack that was released, they did not say anything on the tax, the new tax law. Is commencing from next year. I'm just explaining this for understanding sake, that as from January next year, when you see input VAT on non-current assets, you should allow it.
Thank you, sir.
Yeah. Okay. The next item is what? What is the next item under the expenses?
Stamp duties on rent agreements.
Stamp duty on rent agreements. Is it allowable or disallowable? Stamp duty on rent agreements. Is it allowable or disallowable? You paid stamp duty on the rent agreement you do, maybe with your landlord.
It's allowable.
It is allowable. Yes, it is allowable. Why do you allow it? Fact that stamp duty stamp duty, when you pay it on expenses, that means allowable expenses, it is allowed. When you pay stamp duty on allowable expenses, it is allowed. But when you pay stamp duties on fixed assets, is it allowed?
Allowed.
Eh? It will not be allowed. It's going to be capitalized to the cost of the fixed assets. Do you understand? Do you understand? Stamp duty on fixed assets too will be capitalized.
Yes, sir.
What about
Yes,
stamp duty on ordinary share capital? Is it allowed or disallowed?
Disallowed.
Disallowed. Because ordinary share capital is not an expenses. So go back to our question. Stamp duty on rents is allowed. So that means these are the only disallowable expenses we have. Adding disallowable expenses to the net profit, we get adjusted profits. We get adjusted profit. How much is our adjusted profits? For Nigeria, 1,515,000. For Cameroon, it's 1,295,000. These are our adjusted profit. After our adjusted profit, what do we minus? What do we less?
Capital
Capital allowance. How much is capital allowance?
$8,800,000.
Where do you see 8,800,000?
$1945.
90,000 and 45,000 for Nigeria and Cameroon.
The capital allowance.
Nigeria,
90,000.
90,000.
Nigeria, 90,000. Why Cameroon?
45,000.
45,000.
That means my total profits. Total profit is going to be what? So for my total profit,
Sir, if there are any reliefs, will we less it before the capital allowance? I mean, after the capital allowance, sorry.
which one?
If there are any like loss relief, will we less it after the capital allowance or before the capital allowance?
Before the capital allowance.
Okay, sir.
So this is the total profit. From this total profit, we can now compute tax, CIT. For the CIT, let's assume 30%. 30%. So my CIT, 30% of the total profit.
Okay.
30%. From your CIT, you less what? Double tax relief.
Double tax.
Double tax what? Relief. How do you get your double tax relief? Let's go and do working notes. Working notes. For your double tax relief, we said half of what? Nigeria tax rate. How much is half of Nigeria tax rate? Which the percentage of Nigeria tax rate we use in this question is how much?
30.
30. That means half of 30%.
15%.
15%.
Exactly.
15%. So now Commonwealth rates. Commonwealth rates. Commonwealth rates. For the Commonwealth rate, what is the formula? Foreign tax paid. How much is the foreign tax paid in this question? How much was paid to foreign tax authority?
12,500 dollar.
It's 12,500.
$12,500.
When you convert it to Naira, what is the rate of exchange?
What rate are we using?
What rate are you using? Check the question now.
20 naira.
20 naira to $1.
Foreign tax paid.
250,000.
250,000.
12,500 times 20, 250. What is the total profit of the foreign business? The foreign business, what is the total profit?
375,000.
250,000.
That means the total profit of Cameroon. The total profit of Cameroon. Can we see that?
Okay.
Sir, sorry, please come again for the last part.
Which one?
The after you calculated the the tax paid in naira, 250,000.
Yes.
Please help us roll up small.
Which one can I?
Thank you, sir.
Foreign tax paid all over what? Total profit of foreign business. Is it clear?
Yes, sir.
Total profit of foreign business. So at the end of the day, it gives us how many percent?
20%.
Which one are we going to use between the two?
Half of Nigerian tax.
15.
The lower one, 15%. That means our double tax relief is going to be 15% of what? 15% of what? Out of the total profit, which one want to suffer double tax? Which total profit want to
Cameroon.
suffer double tax?
Total profit of Cameroon.
So it's going to be 15% of Cameroon. Do we understand?
Yes, sir.
That means your net CIT is going to be $615. Another task we need to compute, TET. At how many percent? At 2%. As at that year, it was 2%. 2% of what? 2% of adjusted profit. %2 of adjusted profit. %2 of adjusted profit. So is it clear enough? So this is what you are asked to do in this question. Are you clear?
Yes, sir.
Yes, sir.
Hello,
So,
sir. Sir, please,
yes,
what page? Question what? Page what, sir?
I think somebody have answered your question. Page 181.
181.
Okay. I've seen it. Thank you.
Okay. This is all what we have on double taxation relief. Last week, we have solved one question on double taxation relief. This week again, we have solved another question. So left to me, I think we have tried enough on double taxation relief. I have some other few questions in this double taxation relief that we can lay our hand upon. And I've sent suggested solution on some of the questions on double taxation relief last week. Have I not?
You
I've
did,
sent.
sir.
Uh-huh.
You did. But
Okay.
I have a question concerning question 5.
Question 5.
Yes, I tried solving some of those questions.
That question 5 is on personal income tax.
Yes,
It's on what?
personal income tax.
So they will not test the question 5. Personal income tax is not for advanced tax. It's for tax in skills level. So we don't need to waste our time. I don't think any question on personal income tax will come out in advanced tax. So that question number 5 is on personal income tax. It's on resident individual. So
Okay.
before you can solve the question, you will have understand personal income tax very well. What are the relief on personal income tax and so on like that, which is not in our personal income tax will not be tested for advanced tax. So which one again?
So sorry, for knowledge sake, that pension, the solution that I look at,
Okay,
the
for knowledge
8,
sake,
yes,
let me share the materials so that we can get it for knowledge sake. It's good. Let me share it. Okay. So pension. What do you have on the pension? What is your question on the pension?
sir, the 8% is on what? Is charged on what?
I said 8% of what? B what?
Yes.
BHT.
I don't know the meaning.
BHT. Do you don't know the meaning of BHT?
Yes.
Who can tell me the meaning of BHT? You work every month,
Basic
they deduct
housing
pension
and
from your
transport.
salary. This one, every month from your salary you collect in your company, they deduct pension. You don't know how they deduct your pension. Pension is based on B what? BHT. Basic housing and transport. Your gross salary may include basic housing and transport, will be included as part of your gross salary. Pension is based on basic housing and transport only.
Thank you, sir.
So if you're not paid if you're not paid housing and transport, they will not pay you pension.
If there's no how they will pay you salary without paying basic housing and transport in your gross salary, in your composition of
I'm
your
not
salary.
collecting. There's no housing and transport in my computation of salary.
No, check your payroll very well. Check the payroll slip very well.
I've checked. There's like
Maybe they have
housing and
lumped everything
transport.
together. Maybe they have lumped in your payroll. Maybe they did not break it down to basic housing and transport. Maybe they just write the gross salary. That gross salary stated in your payroll will have include basic housing and transport.
So what's the professional way to ask them that? What is my housing and transport in my salary? Because I know it's not there.
You
Is
can
this
ask
part
them.
of
If you
Is
check your
it
letter of
compulsory that
employment,
they pay
if you check your letter of
is
employment,
of employment?
your breakdown of the salary will be stated.
Damn it. Pick me to back.
Do we have any other question? So what I want us to do, I want us to try question 3. That question is very interesting. Please study question 3 very well. It's a good question. Let's try to study that question 3 very well. It's one of the interesting questions. And question 2 too. Question 2. Let's study that. So with that, we are done with double taxation relief. So this night, the next area we are looking at is tax evasion and tax avoidance. Tax avoidance and tax evasion. By next week, inshallah, we are going to start pioneer legislation. Pioneer legislation, which is income tax relief or tax holiday. So, tax avoidance.
Excuse me, sir.
Yes.
Please,
Go ahead.
in your computation of in the computation of TED, I noticed that there are some that you use 2%, some 3%. Is it the year of the computation of the tax liability that determines the TEDs, or is it the finance arts applicable at that year that determines the TEDs? I'm just
tertiary education. It depends on the year of assessment. It depends on what?
Okay.
The year of assessment.
Year of assessment.
There are some year 2%. There are some year 3%. There are some year 2.5%. When you study past question very well, last direct question, question number 1. If you have question number 1, last direct question, you will see that while looking at the solution, in 1 year they use 2%. In another year they use 2.5%. In another year they use 3%. It depends on the year of assessment. So that is the thing. So tax avoidance and tax evasion. What is tax avoidance? What is tax evasion?
Tax evasion is when it's an illegal way of not paying tax. Tax avoidance is legal.
Okay.
Legal way of reducing your tax.
Tax avoidance simply means a method that we use to avoid payment of tax within the limit of tax law. What that means is that you want to minimize your tax without breaking the tax law. That means you are reducing your tax liability without engaging in illegal means or criminal way. Some scholars also discuss tax avoidance as the process of identifying the loopholes in the tax law. When you identify the loopholes in the tax law, you now take advantage of the loopholes to reduce your tax liabilities. It's part of tax avoidance too. It's another name, another definition of tax avoidance. The process of identifying the loopholes in the tax law and take advantage of the loopholes in order to reduce tax liability. In a nutshell, what tax avoidance means is you are minimizing your tax without breaking or going against the tax law. You are minimizing your tax without breaking or going against the tax law. Why tax evasion? Tax evasion simply means deliberate act or illegal way, illegal means of not paying tax. By understating your income or overstating your expenses or manipulation of your financial statement. Tax evasion means illegal means or illegal way of not paying tax through falsification of accounts or manipulation of your financial statement, which can be maybe you are understating your revenue or you are overstating your expenses so that your profit will be reduced. When your profit reduced, your tax too will be reduced. That is tax evasion. It's illegal, it's against the law, it's not permitted by the law. When you falsify, in a particular year, your turnover is 200 million. When you know that, this turnover, if you disclose it to tax authority, the tax you pay, you are going to pay will be much. You now tell your accountant, this tax is too much. Oh. Please, what can you help us do to this turnover? Accountant now said, we know we can, there's a way we can do it. And ICAN did not teach us how we should be doing that. They will say, we know how, I'm an expert. Accountant too will help you reduce your turnover. It will reduce your turnover from 200 million. It can reduce it. It can remove 150. It can remove 50. It remains 150. That act is tax evasion. It's against the law. It's deliberate act of falsifying your account. That means you are window dressing your financial statement in order not to pay tax. That is tax evasion. Or you do not even register for tax at all. You are a company, you are making profit. You do not even pay tax at all. You are not in the tax net. You are not filing return. You are not making payment of tax. You have not registered for tax at all. That is tax avoidance. That is tax avoidance. Now, let's try to differentiate between tax avoidance and tax evasion. Let's try to differentiate between them. Let's try to differentiate between them. Number one difference. In terms of meaning, tax avoidance is minimization of tax liability by taking advantage of loopholes in the tax law without violating the tax rule. Why? Tax evasion means deliberate act of not paying tax or reducing tax liability using illegal ways. So that is the difference. Another difference is in terms of the concept. Tax avoidance means edging of tax. Edging means you defer your tax to future period. You defer your tax to future period. Why? Tax evasion means concealment of tax. Another difference in terms of legal implication, tax avoidance is use of justified means, while tax evasion means the use of means forbidden by the law. In terms of period, when does it happen? Tax avoidance occur before the tax liability arise. Why tax evasion occur after the tax liability arises. That is another difference. Another difference in terms of consequence, there is no penalties or punishment for tax avoidance. But for tax evasion can result into penalties or imprisonment. Tax evasion can result into penalty or imprisonment. So this is the difference between tax evasion and tax avoidance. Now, reason for tax avoidance and tax evasion in Nigeria. Why does people engage in tax avoidance or tax evasion in Nigeria? Why? Why do we engage in tax avoidance or tax evasion in Nigeria? Number one, absence of compensation from the government. People believe that even the tax that they are paying, government is not compensating them by providing good road, by providing uninterrupted power supply, by providing good security. That what is government using the money for? That they cannot see the impact. They don't feel the impact of the tax that they are paying in the economy. That nothing to show for it. That government is just using the money for their luxury means. Since they cannot justify what they are using the money for. So this discourages some people not to pay tax. Another reason, mismanagement of fund realized from tax remittance. These two and two discourage people from paying tax. This one too discourage people. This one too encourage people from doing tax evasion. mismanagement of funds realized from tax. We will hear every year, government realize 600 billion from VAT, 1 point something trillion from company income tax. At the end of the day, some taxpayers believe that government officials, they are stealing the money. Why am I paying tax? After all, they are going to steal the money. We have heard several cases of mismanagement of funds that at the end of the day, the indicted officer will not be punished. He will be taken to court, and court will be adjourning the case day by day. At the end of the day, the case will die down. So, another one, lack of knowledge of civic responsibility. People don't know that it is their responsibility to pay tax. That means tax authority is not doing well on creating awareness on the importance of taxation, that tax is life blood of a nation, that tax is what is sustaining the economy. Government need to create awareness. They need to carry out civil, they need to educate people on how they should perform their civic responsibility by paying tax. If you say you are a citizen of Nigeria, for you to be a good citizen, you must contribute your quotas to the country. How do you contribute your quota? Is by paying tax. I was listening to a news this evening while coming from work. They said Nigeria has the lowest rate of tax compliance in the world. Our tax compliance rate is 25%, while UK tax compliance rate is about 93%. In some other country, their tax compliance rate is 75%. That means about 75% of those who support, we look at our tax compliance rate, 25%. That means it's 25% of those who are supposed to pay tax are paying tax. Where are the 75%? And they are earning income, they are not paying tax. This is one of the key issues addressed in the Nigeria Tax Administration Act. That was one of the 4 recent tax bill that was signed into law. He wants to ensure that the rate of our compliance increase. In the Nigeria Tax Administration Act that is going to commence next year, he's talking about the responsibility of a taxpayer. What are the rights of a taxpayer? What are their duties too? What is the right of tax authority? What is the penalties for not compliance? So I will employ us as a star student. We should be an ambassador for taxation in Nigeria. We should be encouraging people to be paying tax. Because in the new tax law that was signed into law, the tax law that was signed that will commence next year, the consequence of not paying, the punishment is more. There is severe punishment for not paying tax in the new tax law. One of them is, even some company that is not paying tax, they will be black, their name will be published in the newspaper. That is media damage. and any tax consultant that was caught helping a client to engage in tax avoidance too is going to face consequence. So, lack of knowledge of civic responsibility. Another reason for tax evasion and avoidance is legality of avoidance, of tax avoidance. Since they say tax avoidance is legal, it's legal. When you see something that is legal, that is not against the law, you will take advantage of it. So this is the reason for tax evasion and avoidance in Nigeria. Reason for tax evasion and avoidance in Nigeria. Now, for the sake of time, what are the methods or ways in which taxpayer can practice tax avoidance? What are the methods or ways in which taxpayer can practice tax avoidance? What are the methods or way in which taxpayer can practice tax avoidance? That means tools of tax avoidance. What tools taxpayer used to practice tax avoidance? Number one, acquisition of qualified capital expenditure. That means purchase of QCE. When you acquire qualified capital expenditure, you purchase QCE. You are going to be entitled to an allowance called what? You are going to be entitled to an allowance called capital allowance.
Capital allowance.
And indirectly, this capital allowance will reduce your what? Your tax
Expenses.
Liability.
your tax liability. Because it's going to reduce your profit. Once you reduce your profit, your tax liability too will be reduced. Do you understand? Another one, contribution to approved pension scheme and national housing fund. This one is applicable to who? To personal income tax. Those who pay personal income tax. You know, pension scheme, pension contribution, NHF, NHIF, under personal income tax, we call them tax exempt. We use them to reduce our tax liability. That means that pension that we normally deduct from our salary, 8% of BHT, 8% of basic housing and transport, that they deduct from our salary before they pay us our salary. They are using it to reduce the tax we are paying, the personal income tax that we pay. They will use it to reduce it. Likewise, too, NHF, National Housing Fund, which is 2% of basic salary, 2.5% of basic salary. This one too will be used to reduce personal income tax. So it's tax avoidance. It's a means of tax avoidance. If you want to reduce your personal income tax, you can contribute to National Housing Fund, you can contribute to NHF, you can contribute to NHIF, you can contribute pension. It's a means of reducing your personal income tax. Another one, donation to approved bodies. When you donate to approved bodies, there are some bodies that is listed in the 7th schedule of CETA. 7th schedule of CETA, there are some body that is listed, like Christian Association of Nigeria, public institution like teaching hospital, public teaching hospital, public school, public secondary school, public universities, Boy Scouts of Nigeria, non-governmental organization, NGO, charitable organization. All these people, you can donate to them. Once you donate to them, that donation is an allowable expenses and is going to reduce your profits. Another ways of tax avoidance is payment of reimbursable expenses to staff. But some tax authority argue that this one is tax evasion, it's not tax avoidance. But some people believe it's tax avoidance. Some staff, apart from paying them their normal salary, there will also be another one called reimbursable expenses. They can call it transport allowance or transport subsidy, and so on like that. Another one is claims of excessive interest on loan. Claims of excessive interest on loan. This one is otherwise called thin capitalization. Is one of the topics we are still going to discuss. Thin capitalization is one of the international tax policy, international tax EU. Claims of excessive interest on loan. Another ways of tax avoidance, investment in government security. When you invest in government security, if you are paid interest on those government security, like interest on treasury bill, interest on bond, interest on development stock, is it taxable? It is not taxable. It's exempted from tax. So if you invest in government security while receiving interest as an income, that income will not be subjected to tax. It's a means of tax avoidance. Now, let's look at ways in which a taxpayer can be guilty of tax evasion. Ways. Tax evasion, you will be guilty. You did not practice tax evasion. It's an offense. You will be guilty. What are the ways in which taxpayer will be guilty of tax evasion? What are the ways in which taxpayer will be guilty of tax evasion? Number one, failure to register for tax. You fail to register with the relevant tax authority. You are making profit. You are doing business. You did not register for tax. So, failure to register for tax with the relevant tax authority is a means of tax evasion. It's tax evasion, and there's a penalty for that. Failure to file tax return, as at the end of the year, you fail to file tax return, is a tax evasion. When you make incorrect tax return or false return, you file tax return, but the return is incorrect or false, Maybe you are understating your expenses. So it's a means of tax evasion. Another one, you engage in artificial transactions. Some transactions between your related parties, your family, in the expenses of the company. You said you pay your family holiday allowance. You pay your family, one of your cousin, rent allowance. It's a means of tax evasion. So all these are the means of tax evasion. Now, let's look at measurement put in place by government to curb tax evasion. This tax evasion, tax authority should be looking for a way to reduce. There is no country that they did not engage in tax evasion. Even in UK, they have the system, everything is automated. But despite that, we still see some people that engage in tax evasion, but the rate of their tax evasion is low. So going back to Nigeria, what measure can Nigeria government put in place to minimize, that means to reduce tax evasion to a minimum level? What measure do you think government can put in place to curb this out of this tax evasion? Number one, the use of tax clearance certificates. The use of what? Tax clearance certificate. If you want to bid for contract, if you want to bid for government contract, they should ask for your tax clearance certificate. If you want to open a corporate bank account as a company, bank should ask for your what? Tax clearance certificate. If you want to go to, you want to seek for public position, they should ask for your tax clearance certificate. If you want to collect C of O, they should ask for your tax clearance certificate. All this is going to curb tax evasion. Because if you don't pay tax, they will not give you tax clearance certificate. So for those who are paying tax, they will give them tax clearance certificate. So those who have the tax clearance certificate, they will have access to some benefits. This will encourage those who don't pay tax to go and be paying tax. Another measure put in place to curb tax evasion is stipulated penalties. Government should put penalty. There should be a penalty, punishment for anybody that was caught engaging in tax evasion. The punishment should be wage punishment. There should be the punishment. It should not be just a light punishment. So the punishment, it should outweigh the cost. So by doing that, when you see that if you don't pay, if you're a company, you don't register for tax within 6 months of commencement of your business, if tax authority now said failure to register for tax within 6 months is going to attract a penalty of 50 million. When people hear 50 million, that money is too much. So let me go and register for tax. So I don't want to allow. This will encourage people to pay. So there should be a stipulated penalty for non-compliance with the tax law. When people know that there's penalty, there's consequence of not paying, there's consequence of not registering for tax, there's consequence of not filing tax return. And tax authority is not about stating penalty. There should be enforcement of the tax law regarding the penalty. When tax authority enforce those penalties, and people are seeing in the newspaper that this company was locked, was sealed because of not registering for tax or because of not filing tax return, and they ask them to pay 80 million. Other companies too, they will see tight that please, how much is my profit in a year? So when they know that punishment, penalty for non-compliance is much than the cost of the remedies, people will comply. Another way to curb tax evasion is introduction of withholding tax on some selected transactions. Withholding tax is an anti-tax evasion policy. Government introduced withholding tax to ensure that some tax is collected in advance on such income, and they are deducted at source on those transactions in order to minimize tax evasion. Let me give an example. I'm a professional. I render tax service to XYZ Limited. XYZ Limited is supposed to pay me a professional fees of 15 million. If they send that 15 million to my account, at the end of the year, I may not disclose to government that I received 15 million income. What government is now saying now is XYZ, you need to deduct 5% on that income. That 5% is withholding tax, and XYZ will remit it to government on my behalf. That means on that 50 million, I've paid some tax in advance. Already. This one will reduce tax evasion. Even in the long run, if I did not disclose the 15 million, government has even collect little tax called withholding tax. It's even better than not collecting anything at all. So introduction of withholding tax on some selected transaction is one of the means which government used to curb tax evasion. Tax educations. That means there should be taxpayer educations. You should educate the taxpayer. You should educate the general public. Government should educate the public the importance of taxation, why they need to pay tax. There should be a continuous sensitization on impact that the tax will have on our economy. There should be a media publication that if you pay tax, this tax you pay, they will use it to construct road, they will use it to build more school, build more hospitals. When people are seeing the impact of tax, this will encourage them of paying tax. This will discourage them from engaging in any forms of tax evasion. Another way, tax audit and investigation. There should be audit of the account of the taxpayer. There should be periodic audit. Tax authority should be auditing the tax return filed by the taxpayer, because taxpayer file return based on self-assessment. Self-assessment means taxpayer, they are the one that will compute their tax liability by themselves. They are the one that will compute their capital allowance, compute everything, and just pay the tax. Tax authority give them that responsibility based on trust. That means of assessment is called self-assessment. Is what we are using in Nigeria. Company, they are the one that compute their company income tax by themselves. Personal income tax is computed by the company on behalf of the employee. It's not computed by the government. Everything is on self-assessment. So, for us to know, for tax authority to know whether this self-assessment is correct or wrong, they have to carry out tax audit. That means they have to review your record. By reviewing your record, tax audit and investigation, they will determine, they will establish whether you have engaged in tax evasion. If you are caught, if they review your record, they now discover that you underpay your tax. They will ask you to pay the additional assessment. And you not only pay the additional assessment, they will also add penalties and interest. They will also add penalties and interest. So this is one of the means to curb tax evasion. And another means of curbing tax evasion is establishment of intelligence units. Government should establish a unit called intelligence. This unit is an enforcement unit. They will be going around to enforce the tax law. They will be the one to investigate anybody that engage in criminal acts. When people know that there is an intelligence unit already, that if you don't pay tax, so this intelligence unit, they will discover also, they will come and investigate also. Our managing director may be arrested. When they know the consequence, they will comply. As at this morning, if you read Business Day, one of the headlines is that FRS want to partner with who? Who can tell me? FRS they want to partner with a particular enforcement agency to ensure that there is a high level of tax compliance. FRS said they have signed an agreement with who? With EFCC, that now, as from next year, they will be working together with EFCC. That if they want to go and investigate a company, EFCC will accompany them. And there are some tax cases that they will transfer to EFCC. That means those people concerned, they will be interrogated, they will be prosecuted by EFCC. Tax has now become one of the financial crimes. Tax evasion now, as from next year, when the new tax law commences, will become one of the financial crimes. So in the new tax law, there is a role given to EFCC on compliance to the tax law. Another means to curb tax evasion is introduction of TIN, tax identification number. We introduce it to curb tax. That means every company must have TIN number. If a bank wants to open a corporate bank account to a company, if the company does not have TIN number, they will not open corporate bank account for them. They have to go and get TIN number first. And the TIN number must be a validated TIN number issued by the relevant tax authority. Regarding the personal income tax too, I was reading a news on Wednesday. In the new tax law now, as from January next year, every individual that have bank account must provide their what? Taxpayer ID. If you are an individual, you don't have taxpayer ID, you cannot operate your bank account as from next year. Bank will be sending message now for people to come and upgrade their account by providing their taxpayer ID. Taxpayer ID is now one of the prerequisites for open bank account, even for an individual. Before, it for a company. Now, as from next year, it's part of the amendment. It's part of the changes introduced by the new tax law. As from next year, as an individual, you must have a taxpayer ID if you want your account to be operating. Without taxpayer ID, you cannot operate. Even in the new tax law, in the Nigeria Tax Act, there is a particular section that talk about transaction threshold. That if, as from next year, if you as an individual, you receive a credit in your bank account that is maybe 5 million and above, your bank must notify the relevant tax authority that this person, he receive a credit. The relevant tax authority now have a right to investigate and call you. This amount that you receive in your bank account, was it? Can you tell us the purpose? So next year is one of the January next year. There is a lot of challenge, a lot of reform that will come up regarding the tax system in Nigeria. So I always advise my clients, compliance is good. When you comply, you can sleep very well. But if you don't comply, you are looking for means of reducing tax, you will never be, at the end of the day, you will pay PR, pay this. The cost of non-compliance is too high. Why can't you comply? So this is one of the means to curb tax evasion. Another means to curb tax evasion is called presumptive tax. Presumptive what? Tax. Presumptive tax means best of judgment assessment. When you do not provide information that tax authority will use to assess your tax, to assess your income and tell you the tax you need to pay, tax authority will use their best of judgment. That best of judgment is called presumptive tax. If you don't file tax return this year, if tax authority now give you a notice of assessment based on presumptive tax, by next year, nobody will tell you to do the right thing. So introduction of presumptive tax is one of the means to curb tax evasion. When people know that there is presumptive tax, if I don't file, if I don't disclose my income, these people will just bring letter that I should come and pay even more than what I'm supposed to pay. Let me go and pay what I know I'm supposed to pay before they give me income that is not my own, which is called base of judgment assessment. So all this, they are going to curb. Introduction of tax incentive too. By giving tax incentive to taxpayers that are complying with the tax law, these two will curb tax evasion. Those who are doing evasion, they will say, these people are getting advantage of the tax. These people paying tax, government is giving them incentive. Government is giving them discount. This will motivate them to pay tax. Those who are not complying, those who are not paying. So all these are the means that government use to curb tax evasion. Let's look at the measure that government put in place to curb tax avoidance. Tax avoidance is legal, it's not illegal, it's not criminal, it's allowed. But according to the definition, you identify loopholes in the tax law. You know, when you are doing tax avoidance, it's going to reduce government revenue. Government too, they must look for a way to block those loopholes that taxpayer has taken advantage of it to reduce their tax, so that they will generate more revenue. So all these points I want to mention now is those measures put in place by government to curb tax avoidance. That means to minimize tax avoidance. Because tax avoidance, though is not illegal, is legal, is allowed by the law, but it's reducing government revenue. And government have to look for a way to block anything that will reduce their revenue. So one of the measures put in place by government to curb tax avoidance is Section 19 of CETA, dividend payments. That means dividend assessment. We call it dividend assessment or taxation of dividend. When a company declares a loss in a year, and that company that declared loss, they did not pay tax, we now discover later that this company distribute dividend to their shareholder. When companies distribute dividend to their shareholder and they are making a loss, the question is, where does the company get the dividend? If the company now says they distribute the dividend from their return, then they still, in that year that you distribute dividend to your shareholder and you are making a loss, you pay company income tax. And your company income tax is going to be based on the amount of dividend paid to the shareholder. 30% of the dividend that you pay to your shareholder is going to be your company income tax. That one is called dividend assessment. Why are you paying dividend when you make a loss? Or when total profit available that you are going to put your company income tax on is less than the dividend paid out by the company. In that year, your company income tax is going to be 30% of your dividend paid out. Another one, Section 22. This one is called deemed Section 21, deemed profit. In the new Nigeria Tax Act, they talk about deemed profit. Some company, they will not distribute their profit. They will be having retained profit. When the retained profit is too much and you do not distribute it to shareholder, the law allows tax authority to distribute it to the shareholder. And withholding tax is going to be deducted on those dividends distributed to the shareholders. That is deemed profit. Somebody say you are paying tax on top of loss again. Why do you distribute dividends in a year that you make loss? Another way to curb tax avoidance is turnover assessment. When you make a loss and you have turnover, you may be subjected to minimum tax, and your minimum tax is 0.5% of your turnover. That is turnover assessment. It's one of the measures to curb tax avoidance. Transfer pricing regulation. This one too is used to curb tax avoidance. When subsidiaries sell goods to the parent, that is transfer pricing. Most of the multinational companies, they use transfer pricing to minimize their tax, to engage in base erosion profit shifting. That means to engage in BIPs, to move profit from high tax jurisdiction to low tax jurisdiction. They use transfer pricing. But in 2012, there is an act called Transfer Pricing Regulation Act. That means FRS is now given a responsibility to regulate the price that you transfer goods to your subsidiary or to your parents, so that is done in an arm's length transactions. Another measure that we use to curb tax avoidance is restriction on capital allowance claimable. This one applicable to trading company or service company. When you have too much of capital allowance and your profit is so low, that your profit, the capital allowance is going to be restricted to 66 2/3 of your profit. The capital allowance is going to be restricted to 66 2/3 of your profit. This is one of the means to curb tax avoidance. This one too, rent paid by employer on behalf of employee should not be more than 100% of employee basic salary. This one too is used to curb tax avoidance. Employer have a right to pay rent on behalf of employee. That rent you pay is an allowable expenses. But the rent you pay for an employee must not more than 100% of his basic salary. If it is more than, the excess of it will not be allowed as an allowable deduction. The excess of the rent will not be allowed as an allowable deduction. Now, we have looked at measures put in place by governments to curb tax avoidance. Now, the last we are going to look at this night is what are the measures put in place by government to enhance efficient tax administration system? If you want to have a good tax administration system, in line with the national tax policy, all these measure is going to enhance efficient tax administration. It's going to make tax authority to do their job steadily. It's going to make tax authority to do their job with ease. Number one, payment processing and collection. That means we make use of IT, automated tax system, automated tax collection system. This will enhance efficient tax administration. This one, payment processing and collection, means we are making use of IT to process our tax system. We are introducing software into our tax system. FRS have done this and it's working. LRS have done this and it makes the tax system, tax administration system, it enhances it. It streamlines the tax system. Automated tax collection system. That is number one, which is called payment processing and collection. E.g., Tax Promas, e-tax, e-invoicing, all these has been introduced by the tax authority. This will enhance tax administration system in Nigeria. Record keeping too. Taxpayer, one of the duties of taxpayer is duty to keep record. How you spend money. You should show us the evidence, the supporting document. You should keep the record so that if tax authority is coming for audit, it will make their job to be easy. They will not be asking you, what do we use this money for? Anything you spend, keep the record. So, taxpayer record keeping will enhance tax administration in Nigeria. Exchange of information. This one applies to tax authority. Tax authority in different tiers or in different states should exchange information. We should exchange information. Look at the number of people migrating to Lagos. Some of those people migrating to Lagos State will have registered for tax in another state before, and they have paid tax. The taxpayer in the state that they are coming from should give Lagos State information about them so that it will make job of Lagos State Tax Authority and Lagos State Internal Revenue Service, it will make their job to be easy. It will make them to, it will make it easy to track them. Another measure that will enhance tax administration in Nigeria, as stated in the Nigeria tax policy, is enforcement of tax law. What we need most in Nigeria, what I notice most, why people are still not paying tax, why we still have low tax compliance of tax 25%. Even our tax to GDP ratio is very low. It's the lowest in the West Africa. Tax to GDP ratio of Nigeria is the lowest. That means we are enjoying in Nigeria. We have not been paying tax. People are saying, they want to introduce surcharge, they want to introduce telecom tax. All this is to generate more revenue to government, so that we can have a renewed Nigeria. You heard of surcharge, which is going to commence in January. Starting from January now, 5% tax is going to be imposed on petroleum products, gas, diesel, and so on like that. It is called surcharge. It is used for maintenance of our roads and our environmental system. So it's one of the, because when you look at in the Nigeria Tax Act that will commence next year, one of the aim is for Nigeria to have at least 18% tax to GDP ratio. Our tax to GDP ratio presently now is less than 13%. Why we introduce this new tax law is to have at least 18% tax to GDP ratio. That means the value of our GDP, tax amount should be 18% of it. In some countries, like advanced country, UK, America, their tax to GDP ratio is almost 40%. Another means to enhance tax administration system in Nigeria. Another measure to enhance tax administration, funding of tax authority. We should be funding tax authority. Regular funding of tax authority will make them to do their job efficiently. When tax authority is adequately compensated, motivated, they will do their job diligently. And funding of tax refund. When a taxpayer requests for tax refund due to payment of excess tax, when you have audited them as a tax authority, pay them the tax excess of the tax, pay them the tax refund. Don't delay the tax refund. I'm happy under the new tax law, which is one of the new tax law called Nigeria Tax Administration Act. There is a particular section there that talk about 90 days when the taxpayer apply for tax refund, and if tax authority have audited the account, the tax refund should be made to them within 90 days. Don't delay it. Dispute resolutions too. There should be a dispute resolution between taxpayer and tax authority. I'm happy in the new tax law under the Nigeria Tax Administration Act, there's a body called Tax Ombudsman. This tax ombudsman is going to settle disputes between tax authority and taxpayer. He's going to represent taxpayer in a fair and reasonable manner. So, ladies and gentlemen, this is where we are going to stop this night. We have a question on this issue of tax evasion and avoidance. There is a one calculation question, which by next week, we may solve the question by next week. So thank you for having me. So do we have any question?
Okay, hello, sir. Good evening, sir.
Yes.
Okay, so my question is going to circle around tax planning for a financial year or a fiscal year for an organization who is interested in making their tax planning more effective in terms of what we just explained this evening as regards tax avoidance and tax evasion. How best is it to address tax planning, looking at their possible actions and which may actually negate the current tax positions and the current tax reforms. What does organization needs to do to put together in terms of avoiding evasion of tax, and then as well looking at proper avoidance? Because if avoidance of tax is looking at legal loopholes to take advantage of in the tax system, what are we supposed to be looking at in terms of addressing that for proper tax planning?
Yes, in tax planning, we have a tax planning checklist. You need to review. You first and foremost, you need to look at what are you doing presently. What do you tend to achieve in your tax planning? When you talk about tax planning, it involves step by step. Do you understand me? Step by step. One of the means of doing your tax planning is, in your tax planning, regular filing of your return is one of the tax planning. Filing your return regularly. Now, you need to review the tax law and look for, in the tax law, there are some tax incentives that are applicable to the industry that your company fall into. You can take advantage of those tax incentives. By doing that, you have engaged in tax planning. First and foremost, the industry that your company fall into, you need to look at what is the impact, what is the tax impact on those your industries. So what are the incentives available to those industries? However, doing tax planning, it is not a day job, and it's not for 1 year. You will have started your tax planning since commencement of your operation. But it's not late for you to start now. But doing the tax planning now, you may not achieve the results within a year. Like one of my lecturers say, when you talk about tax planning, it's just as if you are planting a seed. When you plant the seed, within a little time, the seed will germinate. In the long run, it's going to be giving out crops. Those crops will be of advantage to you. But if you don't have patience, if you are somebody that you want immediate results, you may be impatient to eat the crops from the seed you plant. So when you talk about task planning, it is a professional work. We have to do task. We have to, before we can start task planning for any company, we have to look at the task health check. What is the current status of the task system of this company? So what areas can we take advantage of the task planning? So that is what I can say for now. Your question, if you may send message to me, I will respond to your question through WhatsApp. Do we have any question again?
Thank you so much, sir. Yeah, thank you.
Yeah. So in the absence of no question, you can call it a day. Thank you for having me. Have a nice day. Have a good night rest.
Good night, sir.